Welcome to This Explainer. Today, we're diving straight into Alphabet's absolutely stunning turnaround in the AI race. If you've been trying to figure out how a massive tech giant goes from being viewed as a defensive, slow-moving liability to a full-stack monetization engine, and what that actually means for the future of tech investing, you are in exactly the right place. We're going to look at this purely from a financial and strategic perspective. We're breaking down the hard numbers, the market valuation, and the massive infrastructure choices that have totally redefined Google's future.
Let's kick things off with a staggering figure, 140%. That is Alphabet's massive stock surge over just the past year alone. This incredible rally was so strong it actually allowed them to briefly surpass NVIDIA in early May as the world's most valuable company by market cap. Now that is a truly remarkable feat, especially when you remember how Wall Street viewed Google in the very early days of the generative AI boom. Back then, they were seen as deeply at risk. But this number right here, it proves the market has fundamentally reevaluated Google's entire financial trajectory.
What's really fascinating here is the total 180 in Wall Street sentiment. Think back to 2022. Investors were literally terrified. The big existential question was whether generative AI would completely cannibalize and destroy Google's incredibly lucrative search business. But fast forward to today, and that narrative has completely flipped. Now the market is asking if Alphabet is one of the very few companies on the planet that can actually monetize AI across every single layer of the ecosystem.
So here's how we're going to break this down today. First, Alphabet's massive AI comeback. Second, we'll look at the custom TPU advantage. Third, monetizing search and Android. And finally, that massive CapEx gamble.
All right, jumping right into part one, Alphabet's massive AI comeback. How they went from a defensive liability to a market leader.
When you walk through the timeline, it's kind of wild to realize Google was actually the very first AI megatech company. I mean, they were years ahead. They acquired DeepMind way back in 2014, rolled out Google Assistant in 2016, and they literally invented the transformer architecture that makes modern AI even possible. But then, late 2022 happened. ChatGPT hit the market and completely disrupted the exact category Google helped create. Suddenly, their massive head start felt like a huge liability. You might remember the famous bar demo mistake, a stumble that wiped out a jaw-dropping $100 billion in market value in a single day. Google looked incredibly slow. But then, in December 2023, Gemini arrived. Sure, it had some early stumbles with restrictive guardrails, but it proved to everyone that deep inside the company, the strategic gravity had successfully shifted directly to frontier AI.
And look, the numbers here absolutely speak for themselves. Despite those early mistakes, the company mounted a genuinely impressive comeback. Just look at the metrics. The Gemini app quickly hit 750 million monthly active users. Apple is tapping Gemini to power a rebooted Siri and choosing Google as a preferred cloud provider. Most importantly for their bottom line, Q1 cloud revenues surged a massive 63% year-over-year. Plus, a stunning 75% of their customers are now using Google's full stack, everything from chips right up to the Gemini models. They exited the year with double the new customer velocity compared to Q1. This isn't just a simple product recovery, it's a financial powerhouse roaring back to life.
Moving right along to part two, the custom TPU advantage. This right here is the hidden financial engine driving Google's success.
Google has this incredibly unique, top-to-bottom, full-stack advantage. Wall Street absolutely drools over this setup because total integration fiercely protects profit margins. Think about it. They have total control over every single layer. For the models, they've got DeepMind and Gemini. For compute power, they have Google Cloud and their own custom tensor processing units or TPUs. And for distribution, search, Android, and YouTube. Because they have complete integration, with infrastructure customized specifically for their own features, they operate with a massive, undeniable speed and efficiency advantage.
This brings up a brilliant strategic hedge. The real bull case for Alphabet isn't just about having the absolute smartest chatbot in the world. As the quote points out, even if enterprises actually prefer a competing model, like Anthropic's Claude, Google still wins the infrastructure game. All that heavy AI computing activity, it has to live somewhere. And increasingly, custom chips and data center access are the scarcest, most valuable assets in the AI economy. Google hosts the competition, which means they profit regardless of whose model wins the consumer race.
And the scale of this hardware opportunity acts as a massive financial moat against competitors. Mizuho estimates a roughly $61 billion cloud backlog for Google through 2027, driven largely by their custom TPU sales. Google is already on its 8th generation of these chips, one specifically for training, one for inference. This whole space is running at a pace of a $500 billion annual market opportunity. If Google captures just 5 or 10% of that share, it dramatically moves the needle on their growth. It gives investors a direct way to play the AI infrastructure boom without having to rely entirely on companies like NVIDIA or AMD.
Let's pivot to part 3, monetizing search and Android, essentially how they're turning everyday distribution into durable revenue.
The real turning point in Google's narrative happened when they leaned hard into their ultimate core asset. Nearly 3 billion people use Google Search every single day. Google realized, hey, we don't immediately need to be 10 times better than ChatGPT to win this thing. We just have to close the performance gap so we aren't 10 times worse. By doing that, they protected their massive user base, proving to Wall Street that their incredibly lucrative search margins weren't just going to vanish overnight. Building off that, they're aggressively injecting AI into literally every piece of hardware they touch. They are launching a completely next-gen version of Android driven by Gemini intelligence in 2026. They're integrating Gemini across all form factors: cars, TVs, smartwatches. Honestly, pretty soon your toaster might be running Gemini. But the goal here is absolutely serious. It cements their entire ecosystem. They're even launching a new AI-native Google Book laptop this fall. By injecting Gemini everywhere, it turns free consumer distribution into rock-solid long-term monetization, gathering data and funneling users right back into their lucrative ad and enterprise networks.
Which brings us to our fourth and final section, the massive CapEx gamble, the multi-billion-dollar infrastructure loop.
You've got to see this fascinating, high-stakes capital flywheel playing out right now between Google and the AI startup Anthropic. Check out the steps. Step 1. Google commits a reported $40 billion in investment to Anthropic. Step 2. In return, Anthropic is reported to have committed to a massive $200 billion Google Cloud contract. And Step 3. That capital just flows right back into Google's revenue streams as Anthropic pays to use Google servers and TPUs. It is a brilliant, continuous loop of infrastructure spending that effectively guarantees cloud revenue for Alphabet. But, and there's always a but, let's look at the flip side here: customer concentration risk. If that reported $200 billion Anthropic deal is measured against Alphabet's total cloud backlog, it could represent more than 40% of their future contracted revenue. That is a massive reliance on a single partner. When one customer holds that much leverage, it can severely compress your pricing power and, ultimately, your long-term profit margins. We literally saw Oracle's stock lose half its value over a few months when investors started worrying about their heavy reliance on OpenAI for backlog. For Google, the massive question is how much they fence off this monetization and exactly who they allow to use their scarce TPU infrastructure.
And the sheer scale of this broader gamble honestly cannot be overstated. Alphabet is projected to spend up to $190 billion on capital expenditures. Just to put that into perspective for you, that is more than double its 2025 level, which itself was already double the year before that. The pace of this spending is just relentless. They are betting the house that intelligence at scale will create the most valuable companies in the world, and they are funding that belief with historic levels of cash. The big question keeping investors up at night is how long Alphabet can sustain this kind of spend before it severely eats into their long-term profit margins.
Which leaves us with the ultimate financial test for Alphabet moving forward. Will this historic $190 billion spend cement an unshakable infrastructure empire where every single AI winner has to pay Google a toll? Or does it become a margin-crushing trap tied to a handful of fragile startups? Alphabet has built the ultimate AI casino here, but in this era of mega spending, does the house really always win? Thanks so much for joining us for this explainer.